Hello, Navya, am I audible on Teams? Hello, Navya, Navya Kashyap, am I audible on Teams? Can I start? Hello, okay, let's start. So now we are moving forward towards the financial institutions that are various types of financial institutions that are involved in providing the credit to the general public. So first of that institution is IFCI, which is the Industrial Finance Corporation of India. The main aim of IFCI is to provide credit, right, to short term and long term as well as medium enterprises. So what they are saying, main purpose of it's to provide credit, that is the loans or whatever in through credit cards, through loans, short term loans, long term loans, or through a credit card. They will be helping to provide medium and long term enterprises credit. What they are saying, it was established on 1st July 1948. The main objective of IFCI is to make provide medium and long term credit to industrial units. Functions: granting loans and advances for a period of 25 years. It is providing long term credit mostly. See, 25 years is a long duration or a medium duration. It is not providing short term credit. Subscribing to the shares and debentures floated by industrial concerns. Like when we have industries which are issuing their debentures or shares, this IFCI, that is the Industrial Finance Corporation of India, purchases or subscribes to these shares and debentures. So it is a medium through which it is providing credit to this industries or an organization, right?
हॅलो
Hello, ha Shaila.
आवाज नाही येत आहे मॅडम.
Just a minute, we'll move on. Teams, I'll share the link. Google Meet. Like that day only we will move on Google Meet. Check this link to join. I have joined already. What is happening? What she's typing? Hello, am I audible, Shaila now? Hello. Shall I, am I audible? Hello. Okay, fine. I'll start. Navya. Navya is not joined yet, right? Okay, I'll start till then. Has raised a hand. Okay, okay. It means I am audible, right, Shela? Okay, Shela, we'll move further. See, so subscribing to the shares and debentures floated by industrial concern. What does this mean? That when an organization is issuing shares or debentures, the IFCI subscribes or purchases these shares and debentures. It means it is providing money or credit to these industrial units to meet their requirements of capital. Right, Shela? Next is granting loans in foreign currencies. IFCI is also helping medium and long-term enterprises to provide loan in various foreign currencies. Guaranteed for deferred payments in respect of import for capital goods. Hello?
हॅलो मॅम.
Yes, Shela, am I audible?
हा आता येतो मॅम आवाज व्यवस्थित होते आता.
काय?
आता येतो मॅम आवाज व्यवस्थित.
Okay, fine.
पेज नंबर सांगता का?
Page number 125. Page number 125.
सेकंडरी फंक्शन आणि कंटिंजंट फंक्शन तेच का मॅम?
What did you say? I couldn't hear you. Sorry. Hello.
हॅलो, आवाज येतोय मॅम?
Be a bit loud, please.
कंटिंजंट फंक्शन आणि सेकंडरी फंक्शन तेच चालू आहे ना?
नहीं 125 पेज नंबर 125 फाइनेंशियल इंस्टीट्यूशंस. Last time we completed the difference between commercial bank and reserve bank, right? You recall? And now we are moving to financial institutions. What?
बुक मध्ये पेज नंबर वेगळे आणि तुम्ही जे ऑनलाइन हे करता ना त्याच्यात पेज नंबर वेगळं असतं.
Okay, so money and banking, go to the chapter which is related to money and banking and financial institutions. See, you could see the screen on this. Financial institutions in money and banking.
मनी टाइप फीचर वगैरे ते का मॅडम?
Money and banking is the chapter name and financial institution is the topic which we are going to discuss.
Wait ma'am.
Okay, can I start? Okay, I am starting, Sheila.
Yes ma'am.
State Financial Corporation, SFC. The first state financial corporation was established in 1953 in Punjab. And they are saying at present there are 18 state financial corporations. The main objective of state financial corporation is what? To provide loans to the small and medium industries in various states. So every state will have a particular state financial corporation, and that particular state financial corporation will help the industries within that state to provide loan to them, to the small and medium scale enterprises, because these small and medium scale enterprises don't get loans such easily in the market because their business has not expanded that much. So that's why this state financial corporation helps to provide loan to these enterprises. Next is Industrial Credit and Investment Corporation of India, which is ICICI. You have heard about ICICI, right? It is a private bank, right? And it is operating to provide as a private bank credit to various individuals, households, financial institutions as well as companies, right? State Industrial Development Corporation, SIDC. The main objective for establishment of SIDC is to achieve the rapid industrialization in the state. At present, there are 28 SIDCs in India. So the main objective of SIDC is to provide help in the industrialization. How it will help? It will provide credit to them when required. It will assist in providing guidance and other required things as and when necessary to these enterprises within the state. Okay. Next is UTI, Unit Trust of India. It was established in 1st February 1964. What is the main objective of it? The main objective of it is to channelize, to help people make savings, to do savings, help people save their money and to mobilize it in investment channels. See, it was established on 1st February 1964. The main objective of UTI is to encourage and mobilize the savings of the community and channelize them into productive corporate investment. Functions: mobilize the savings of relatively small investors. It is helping to these small investors develop a habit of saving and channelize their savings into corporate investments. Channelize these small savings into productive investments. Distribute the large scale economies among small income groups. So it is mostly helping the small investor, because problem is with the small investor only. He does not have that much capital or that much savings to invest in large investments. So he should get support or assistance with the help of his small savings, how he can make investments and grow that investments. IDBI, Industrial Development Bank of India. You have heard about IDBI Bank, right? Shaila, you might have heard or not.
Yes, ma'am.
So it was established in July 1964. It is the apex bank in the industrial credit. Up to 1976, it was the subsidiary bank to RBI. But after 1976, it was formed as an autonomous corporation. What does autonomous corporation mean? It means that it doesn't come under any specific, it doesn't operate under the control of any other management. It has its own management. It will operate under its own policies. It will not come under the other, what we can say, it doesn't fall under the, it does not have to follow the directions or control of the other any institution. It has its own authority to operate in its own ways. Functions of IDBI. It can establish the cooperation and coordination among the industrial financial institutions. It provides direct finance to industrial units. It is a bank, so it will be providing credit facilities to the industrial units, right? Next is, it saves the weaker industrial units through the Development Assistance Fund. What happens when there are weak industrial units which are on the range of, like, they are not able to operate properly their business, or they are not getting the required profit, or there is problem in their management and they are on the verge of, like, the organization is going to stop its operations. They are on the verge, like the organization will be closed. So these weaker units, it's helping them with the provided credit and other development facilities with the assistance fund. It assists in the creation, expansion and modernization of industrial units under private sectors. It also provides the export finance. What they are saying? Expansion and modernization of industrial units under private sector. They are providing these helping in the expansion of the industrial units in the private sector. Export and Import Bank of India, EXIM. It was established in 1st March 1982. It is a non-bank financial intermediary, confined its area of operations to foreign trade of India. It also performs other functions like export, rediscounting, refinancing the supply credit, bulk import finance. When we are importing in bulk, right, we have to pay a large amount. That time when the import is in bulk, this EXIM bank will help in providing the available capital for importing. Foreign currency pre-shipment credit. Then product equipment finance program. Business advisory technical assistance. Next is what? National Bank of Agriculture and Rural Development of India, NABARD. The name only suggests, right, it is a nationalized bank for agriculture and rural development. The purpose of this establishment of NABARD is, just a minute, someone wants to join the call. Who is it? But shit. Sheila, are you there? Bhumesh, okay. So the name NABARD, National Bank for Agriculture and Rural Development, the name only suggests it is a nationalized bank. For what purpose? Its purpose is agriculture and rural development. So to farmers, small farmers, it will provide the credit, it will assist in rural development and help in agriculture and rural development. See, it was established in July 1982 on the basis of recommendations of Crafi Card. It is the apex body in agricultural credit. If anyone wants agricultural credit, it is the apex body in that. It is the main organization in it. It takes over the functions of Agriculture Credit Department of RBI and Agriculture Refinance Development Corporation. It provides all sources of refinance to the cooperatives, commercial banks and regional rural banks. It also promotes the research in agriculture and rural development. They are saying what? It is also helping in the rural development and agricultural research. Like see, there are various types of agricultural research, like there are people who are doing on research on different agricultural the plants which we are planting as agriculture. So these on the research on the fertilizers, it can be on the seeds, it can be on the plants which they are planting. So this research is done and it is helping in this research and rural development. Life Insurance Corporation of India, LIC, right? Why? The purpose was to bring together all the private life insurance corporations and develop one single reliable insurance corporation which has more stake of the government and help the people in providing insurance. See, it was established in 1956 by nationalizing 245 private insurance companies. The primary objective of nationalization was to protect the interest of policyholders and avoid the misuse of funds. Secondly, the object of nationalization was to direct the investments of the funds in government security, leaving a small part for private sector. We said LIC was formed by 252 private insurance organizations were clubbed, and the main purpose was like the policyholder's interest and his fund should be in a safe hand. If these life insurance corporations were private, LIC was a private, the funds were not that safe, because now it is converted into a government parts, government has its holdings in it, the funds of the investors are safe now. General Insurance Company. It was formed as government company in 1972. Before nationalization, a few big companies and about 100 small companies were in this business. At present, GIC is provided to 4 companies. They are National Insurance Company, NIC, New India Assurance Company, Orient Fire and General Insurance Company, United India Fire and General Insurance Company. So these general insurance means what? That it is a car insurance, like that can be a car insurance, like if you have a car or other insurance, that is a general insurance. The main feature of general GIC is what? To sell insurance services against some forms of risk like loss of physical assets of various kind, the fire accident, and against personal sickness and accident. See, car insurance can be said to be a general insurance. 127. You can see now money and banking, general insurance. Go into money and banking chapter and general insurance.
Hello.
Yes, Shela.
बुक मध्ये ना मॅडम 135 पेज वर येते.
That is fine, na, but the content is same. It doesn't matter.
सेम आहे. पेज नंबर चेंज होतं.
That is not a big problem or a big challenge. Okay. Securities and Exchange Board of India, SEBI. It was set up in 1988. It got statutory reorganization in 1992. The main purpose of, what is the main purpose of SEBI? To regulate the stock exchange and other securities market. So SEBI provides guidelines to, for this operations of the stock exchange. It helps in controlling that there are no frauds, like problem of like very high, the price of stock will go very high or very low. So it is controlling the stock and the securities market, that proper genuine trades take place and there are no fraudulent intentions or wrong things done to earn money through stock market. Private insurance companies. This millennium has witnessed the insurance sector a journey extending to nearly 200 years. In 1993, the government set up a committee under the chairmanship of R.N. Malhotra, former governor of RBI, to propose recommendations for reforms in the insurance sector. That more reforms will be provided to the insurance sector. For this purpose, a committee was set up. According to the recommendation of the committee, huge opening was for private companies in home and away. Besides the public companies, the others are the private insurers, both life and general. Most of the insurance was through private insurers who have done a joint venture with foreign insurance companies to start their insurance business in India. Some of the private life insurance companies are Aegon Life Insurance, Aviva Life Insurance India, Bajaj Allianz, and some of the general insurance companies are Aditya Birla Health Insurance, Bajaj Allianz General Insurance, and Bharti AXA General Insurance. SWIFT. You might have heard about SWIFT, like SWIFT payment. I did a SWIFT payment. So these are the quick payments which can be made by, what is the full form of SWIFT? Society of Worldwide Interbank Financial Telecommunication. So SWIFT is a huge messaging network banks and other financial institutions use to rapidly, precisely and securely send obtained information such as money transfer instructions. So it is a very secure. Secure means what? The information provided through it is secure, means that no one can access that information. That information will be confidential and private. So it is a secure medium through which the information will not be leaked or provided to another person. Like see, some information like our CVV on the debit card, then our other details like PIN of the Google Pay password or PIN, right? It is a confidential information. So it should be kept secure. Other details also are confidential information which are kept to be secure. And it is helping in money transfer. It is a protected financial message carrier which can evade fraudulent transactions. See, it is also helping to evade fraudulent transactions. Specifically, it carries messages from one bank to another bank. Say, from bank X reaches bank Y. BIS. Bank of International Settlements. So it is helping in what? International settlements. This bank will help in settlement of transactions which are international. In the globalized world, under the interlinkages between domestic economies, banking and financial operations with the rest of the world, international cooperation in terms of smooth running of banking and financial system is required. The Bank for International System (BIS) is an international financial institution owned by central bank that fosters international monetary and financial cooperation and serves as a bank for central banks. The mission is to support central banks' pursuit of monetary and financial stability through international cooperation and to act as a bank for central bank. Currently, 60 central banks or monetary authorities are a member of Bank of International Settlement. Reserve Bank is also a member of the organization. These Bank of International Settlements are helping the central bank to provide an efficient functioning. They are the member banks which are supporting the central bank, that is the Reserve Bank of India. Mudra Bank. India's economic growth largely depends on small and medium enterprises, right? Because these sectors are in large scale, and what happens is that they are not getting the required credit. If proper credit is provided to them, these small and medium sectors can grow and become large organizations, right? But the banks and the financial institutions are mostly reluctant to provide loans to these sectors in seamless manner. So these sectors, small and medium sectors, don't get the required credit or loans which is required because banks are unwilling to provide them the required amount of loan. Micro Units Development and Refinance Agency Bank is a public sector financial institution in India. It is a public sector bank. It delivers loans at low interest rate to these small and medium enterprises. Why? So that they can grow. It will lead to economic growth, right? In simplest terms, to microfinance institutions and non-banking financial institutions which then provide credit to small and medium and small enterprise. It was launched by Honorable Prime Minister of India on 8th April 2015. The minimum age of the applicant must be 18 years and the maximum Mudra loan age is said to be 65 years. Loans can be availed by non-farm income generating business in manufacturing, trading and service. Why non-farm? Because for farming we have NABARD, right? National Bank for Agriculture and Rural Development. So related to farming or relating to agriculture, NABARD will be helpful. Here, other than farming, which are small manufacturing, trading businesses, these will get loan. The requirement of credit must be 10 lakh or lower. They have set a limit. They can give credit up to 10 lakh or lower than 10 lakh rupees. Next is alternative investments funds. What are alternative investment funds? like private equity, hedge funds, venture capital. These are alternative investment funds rather than stocks, bonds. These are traditional type of investments. So you know what is venture capital? So venture capital is like, you see that what it comes on TV. What is the name of the show? Shark Tank, right? You have seen it? Sheila, do you see that Shark Tank? There are various investors sitting and people come and advertise about their business, their profit, their contribution, their EPS,
Yes,
their
ma'am.
different, what is their sales growth in last 4 years, what is their revenue growth. Do you see Shark Tank? What is the name? Hello? Do you see Shark Tank? So in that Shark Tank, there are their people, their business has not grown that much, right? It is a small business which they are starting. But what do they see in that business? Does that business have good financials? Does that business can grow in the long term, right? Does that business have the potential to grow in the long term? Right, seeing these factors, their financials and their potential to grow in the long term, and other macroeconomic environments such as there is how much is the need for the product or service, they invest in that business, right? So that type of investment is known as venture capital. Like these businesses are very small or at the initial stage, like startup or just started business, but investors seeing their potential to grow, seeing their financials and the demand for their product and competitors, they invest in this business. So such type of investment which is done by the investors is known as venture capital. Clear, Sheila?
Yes, ma'am.
Next is what? Hedge funds. So hedge fund is a type of investment which takes place when, see, hedge funds are mostly wealthier investors take place hedge funds. We as a common investor or an individual, our investment amount will be very low. And wealthier investments like HNIs or people who have lot of money, they are the investors in hedge funds. Why? Because hedge fund can make a huge profit also and a huge loss also. If the person is a normal person, he will not be able to bear that loss. So mostly hedge funds investments are made by wealthier people in that fund, and their strategies which are used by hedge funds are very complex strategies like short selling and various different strategies, and the portfolio is also very complex. So that is why the risk factor is more. The hedge fund may lose a lot of money also. So to bear that risk, the person should have lot of money. So wealthier investors invest in hedge funds. Managed funds can be mutual funds or any other funds which we can see, right? Clear? So these are alternative investment funds, and it is helping. This is usual existing of investment funds in India in conventional form. Normal investments are stocks, bonds, but these are alternative. Though there are some alternative funds. Alternative investment fund is one type of investment fund in India. It is an investment that differs from conventional investments such as debt securities and stocks. It consists of investment funds that are privately pooled and which invest in private equity, venture capital, hedge funds and managed funds. Bad bank. What does mean by bad bank? See, it is not a bank with bad thing like that. Just a minute. Sheila, you have never watched Shark Tank, Sheila? Or you watch?
Yes, ma'am.
I didn't get you. Watch or don't watch. Have you ever seen Shark Tank, like the episodes which come out of Shark Tank, any one episode?
I just see the advertise, but
Okay,
not
okay, okay,
completely.
fine. But you are aware with the concept, like how do the investors
Yes, ma'am.
invest in that?
They are give the loan.
Okay. So see, bad bank. See, if a bank has provided credit and that credit is not paid, means the loan is not paid, the person did not pay that loan to us, whatever may be the reason, he became bankrupt, the institution became insolvent, right? So we could not recover the loan amount, so that became our loss, right? So it is our, so such losses are called as non-NPA, that are non-performing assets. So this bad bank, what it does, it helps these banks, commercial banks, to recover this loan amount which is NPA. Got it? Shall I, any doubt? You got what is a non-performing
Hello?
asset or NPA?
Not getting, ma'am.
What did you say? Can you be a bit loud? You got it?
Not getting, ma'am.
See.
Please explain again.
I will explain again. See, I am a commercial bank. I give credit or loan to some individual or financial institution. Okay? That individual did not pay the loan amount along with the interest. Okay? He did not pay me. So that loan became what? A loss to me, right? I could not recover that loan. So it is a loss. So we can say it is a NPA. It is called as NPA. That is a non-performing asset. Clear?
Yes, ma'am.
Clear? Huh. After that, this NPA is shown on the balance sheet of the bank. So, to recover this non-performing asset, that is the loan which is not recovered by commercial bank, bad bank helps these commercial banks to recover this loan which is not paid by the individual or financial institution to whom the bank gave loan. So to recover this loan or the non-performing asset of the bank, bad bank helps commercial banks. Now clear, Shela?
Yes, ma'am.
Bad bank. The history of bank operations in India reveals that there are huge non-refunded funds from the borrowers. Same thing, like we have taken a loan and the loan is not paid to the banks, which is termed as non-performing asset or bad debts or bad loan. Bad loan means what? We did not recover the loan amount from the person to whom we had given the loan. The banks could not recover the major part by their own instruments and legal support. Therefore, the government of India recommended for an autonomous body to help in recovering these funds. So, the bad bank will help the commercial banks to recover this loan from that person. By the term bad bank, it is referred to an asset reconstruction company or an asset management company that takes over the bad loans of commercial banks, manages them and finally recovers the money over a period of time. The bad bank is not involved in lending and taking deposits. See, the only function of bad bank is what? To help the commercial banks to recover the bad loan or the non-performing asset. It will not, like a normal bank, commercial bank, it will not take deposits from the people, neither lend money to people as loan. Its only purpose is to help the commercial banks to recover bad loans or non-performing assets. India's bad bank, National Asset Reconstruction Company, will acquire and aggregate the identified NP accounts from banks and India Debt Resolution Company IDRCL will handle the debt resolution process. Hedge fund. See, we discussed previously, a hedge fund is a fund which uses complex strategies and higher risk to gain profit. But hedge funds investments are made by only wealthier people because the risk is lot. You can incur a huge loss also. So to bear that loss, a normal person cannot bear that loss. So normal people are not allowed to invest in these hedge funds. Hedge fund is a pool investment fund, trades in relatively liquid assets and is able to make widespread use of complex trading, portfolio construction and risk management methods in an effort to advance performance such as leverage, short selling and derivatives. Some samples of hedge funds are Munuth Hedge Fund, Forefront Alternative Investment Trust, QuantFirst Alternative Investment Trust and IFFL Opportunities Fund. Price earnings ratio. How we will calculate the price earnings ratio? PE ratio, what we see. That is share price divided by EPS, that is earnings per share. So this is the way we calculate P ratio. We take the share price of the stock divided by the EPS, that is the earnings per ratio, and that we get the P ratio for that particular stock or company. Right? See, this P ratio is helped to determine if the value of the stock in stock market, it is used to see if the stock is overvalued or undervalued. Means what? When if the stock is overvalued, we will not purchase that stock. But if the stock is undervalued, we will purchase that stock. If the stock is overvalued, we will sell it out. Clear, Sheila?
Yes, ma'am.
Overvalued means what? The value, intrinsic value, it is more than its intrinsic value. That is its actual value that should be according to its financial, according to its growth or reputation in the market. But its value is very more compared to its intrinsic value, then it is said to be it is overvalued. And if it is less than its intrinsic value, we say it is undervalued. So in stock market, when the stock is overvalued, we sell it out, and when it is undervalued, we purchase that stock. So this P ratio helps in determining and taking decisions whether to purchase or sell the stock of that company. Clear?
Yes, ma'am.
The price earnings ratio. The price earnings ratio, also known as the P ratio, is the ratio of a company's share price to the company's earnings per share. We saw, right, how we will calculate P ratio? Share price of the company divided by the EPS of the company, that is earnings per share. The ratio is used for valuing companies and to find out whether they are overvalued or undervalued. P ratios are used by investors and analysts to derive the relative value of the company's share in apples to apples comparison. It is also used to compare a company against its own historical record or to compare aggregate markets against other companies or over time. Okay? Venture capital. We saw, like in Shark Tank, there is venture capitalistic people or investors who are investing, right? Because the people who come there, their companies are operating at a small scale, right? They see how they see their financials, they see their how the product's demand is there, what is the competition for the product in the market, and what potential it has to grow as a large organization in the long term. And seeing these things, they invest. So these are known as venture capital investments. It is a type of private equity financing that is provided by venture capital firms or the provisioning of funds to startups, right? early stage and emerging companies that are believed to have high potential growth, right? They will check, right? If they have the potential to grow, then only they will invest in that company, right? Or which have established high growth in terms of annual revenue, number of employees, scale of operation, market power, etc. Now we will see. Clear it up till now, Shela? Hello?
Yes, ma'am.
Hello,
Yes.
Shela. Is it clear up till now? Any doubts?
No, ma'am.
Okay. Asian Development Bank. It was established in 1966. The main aim for establishment of ADB is to promote progress of number of countries, social and economic progress of number of countries in Asia and Pacific. The name only suggests Asian Development Bank. So it will help in the development of Asian continent, right? It is owned by governments of 37 countries from region and 16 countries from outside the region. Its headquarters is in Manali, Philippines. Poverty reduction is now the main mission of Asian Bank. Because see, other Europe and other countries like America, Canada, the poverty level is low there, right? Means the poverty level is not that much there, which can be seen in these Asian countries like Bangladesh, India, Sri Lanka. There is a large poor people staying in these countries, which are developing countries, right? So the main aim of Asian Bank now is to help these poor people improve their living, standard of living, other things, and providing them various facilities. IMF, International Monetary Fund. It was established in March 1947. One of the outcomes of Bretton Woods Conference was IMF. The main objective of IMF is to administer a code of fair practice in the sphere of foreign exchange and to make loans to economies experiencing temporary deficit in their balance of payments. See, some economies face problems in their cash, right, or the amount of cash which they have. Like, where do they get this money or the cash they have with them? Through taxes which they receive from the people, right? Direct or indirect. They will have certain fund or reserve with them. But if their expenditure relating to the welfare of the general public is more than the reserve that they have, they will need to borrow. So that IMF, International Monetary Fund, helps to provide money or capital to these countries which have deficit, like their expenditure is more than the reserve they have. That is, reserve will come from where? Taxes and indirect taxes that the government will recover, and expenditure it has to incur on the welfare of the people, right? That is the expenditure. So if their expenditure is more than the reserve, they will have to borrow, right? So that is deficit. So in that case of such scenario, which is a country which is facing deficit, it will approach IMF, International Monetary Fund, to get that amount. Quota. It is the membership contribution fixed in terms of national income, and international trade members are required to subscribe quota partly in gold 25% and partly in domestic currency 75%. Exchange rate. Members of IMF had to declare the par value of national currency in terms of gold or American dollar. See, they have, if I am a member of the IMF, what I have to do? I have to declare what will be the value of rupee. If India is a member of IMF, it has to declare what will be the value of rupee in terms of gold and in terms of American dollars. Once the par value of different countries is fixed, it becomes easy to determine the exchange rate between the two countries, right? It will help in determining the exchange rate, because the IMF has to give funds to that country in their exchange rate, right? If IMF has to give funds to Bangladesh, it will have to give in that currency. If it has to give to Singapore or Malaysia, it has to give in that currency. Japan in their yen currency, right? So that's why it is necessary to determine the exchange rate and the par value here. Special drawing rights. SDR was first introduced in 1969. It is the special currency issued by IMF. For two reasons, IMF created SDR. Why SDR was created? To overcome the shortage of gold in the world economy. In the world economy, they want to overcome the shortage of gold to avoid the movement of gold across national boundaries. SDRs are in coupons. It is used in place of gold. Hence, it is called a paper gold. SDRs are what? Paper gold. Like a paper, if you purchase that, gold is that is a paper gold. That this much amount of gold you hold. That are SDRs. World Bank. It was established in 1947. One of the outcomes of Bretton Woods Conference was establishment of World Bank. The main aim of establishment of World Bank is to help reconstruction of the member countries damaged in the Second World War. See, after the Second World War, there was a lot of damage in the world. Various countries, you know, like other countries, they lost everything, right? There was no, they lost their infrastructure was lost, they lost many things, they lost proper road facilities, everything in the country was destroyed. Many industrial corporations or industrial units stopped. So it is necessary, after the Second World War, these countries which were involved in the Second World War had to face lot of poverty or lack of infrastructure facilities, and other facilities were not available in these countries. So the main aim of World Bank is to support or help these countries which were destroyed in the Second World War, to help in their economic development. The original name of the World Bank is the International Bank for Reconstruction and Development. IDA, International Development Association. It was established in 1960 and is affiliated to World Bank. The main aim for the establishment of IDA is to provide assistance to low developed countries whose per capita income is less than $520. It also grants the credit on cheap terms compared to World Bank loans. See, countries whose per capita income is less than $520, this IDA will help such countries in improving their per capita income. Per capita income, you know what is, Sheila?
Yes, ma'am.
Can you tell me what is per capita income?
No, ma'am.
See, per capita income is the average income of a person in any country. How much an average person earns, average people earn in that country. Clear?
Yes, ma'am.
Now we will see measures of credit control and market. We saw previously how commercial banks and central bank or the Reserve Bank of India operate, right, Sheila?
Yes, ma'am.
So the Reserve Bank of India controls these all the commercial banks, right?
Yes.
And the commercial banks keep some, can borrow from the central bank if required, or the Reserve Bank of India required. Do you recall?
मधले जे लेक्चर होते ना,
Commercial bank may borrow funds from the central bank or the Reserve Bank of India if required. Do you recall anything like that we were discussing previously? Okay, fine. See,
ma'am.
commercial, the main bank is the central bank or the Reserve Bank of India, right, Shaila?
Yes, ma'am. Yes.
So, Reserve Bank will help these commercial banks in what purpose?
Yes.
In
Yes.
economic welfare or welfare related activities, right? Will
Yes.
direct and control these commercial banks. Commercial bank take deposits from the general public, right?
Yes.
And they give this, some part of the deposits, they give it to give at credit or loans, right?
Yes, ma'am.
Huh. But what we discussed previously, the commercial banks will not give the complete amount of deposit or cash available with them as a loan. Why? Because if the depositor comes and asks me in case of emergency or in case he needs the fund, I should have some liquidity or funds available with me to give that person, right?
Yes, ma'am.
We discussed this, right? So there are various credit control measures which operate in this money market. Various credit means what? The loan that the commercial banks are providing to the individuals, to the households, to the financial institutions through various means like short-term loans, long-term loans, or either through a credit card or either through a overdraft, right?
Yes,
So
ma'am.
we will be discussing this. How commercial banks create credit in the economy. A commercial bank is a dealer or a creditor. Creditor means what? To a you know what is debtor and what is creditor? You know what is debtor and what is creditor? Tell me. Debtor is a person who owes us money. That is, it can be our customer from whom we have to receive the money, and creditor is a
Like
person
dividend
to
credit,
whom we
ma'am.
have to pay the money, right? Right? You're not clear on these concepts? Debtor, creditor. Creditor is a person to whom we have to pay money. It can be a person from whom we have purchased raw material. So if we have purchased raw material from that person, we have to pay money to him. So he is our creditor. Debtor is a person from whom we have to receive money. Right? So debtor is a person from whom we have to receive money. If he gives goods or services to a person, he has to pay us money. So he becomes our debtor. Clear, Shaila?
Yes, ma'am.
So commercial bank is a creditor. Why? Because from commercial bank we take loan, right? And we have to pay that loan amount to the commercial bank. So to whom we have to pay money, commercial bank becomes our creditor. Clear, Shaila?
Yes, ma'am.
It can create credit, that is, can expand the monetary base of the country. See, we saw in last lecture how commercial bank create credit. People in the economy earn money, they save that money, they keep that money in the bank, in a bank account or in the form of FDs with the bank, right? So bank takes with the available deposits, some part of the deposit bank gives as loan, right? So that is the way commercial banks are creating credit in the economy. It does not, but see how commercial banks don't print money. Do they print 1 rupee, do they print 100 rupee note, 1000 rupee note, 5 rupee, 10 rupee coins and create
No, ma'am.
credit? Commercial banks
No, ma'am.
print notes or coins?
Reserve
Hello, Sheila?
Bank is printed.
Huh?
रिझर्व्ह बँक
हाँ, Reserve Bank of India does it. So commercial bank without printing these notes create credit in the economy. So Reserve Bank of India can create credit by printing notes or coins. Clear? What is the name? Kunal, clear? Now we will see how we saw commercial banks don't print, but they take the deposits from general public, and out of the part of deposits they give credit, right? Banks create money on the basis of their cash deposit. The process of credit creation is that the depositors think they have so much money with banks, and borrowers from banks say that they have so much money with them. Summing the two, we find an amount more than the cash deposit. Let's see how they are creating credit. See, suppose a bank receives a sum of rupees 1000 as deposit. Say, I am a person, I saved 1000 rupees. So what did I do? I have this amount 1000 rupees in my savings bank account with a commercial bank, that is State Bank of India, suppose. Okay. So out of this 1000, what we discussed, commercial bank will not lend all the money that it is available in the form of deposit. Only some part of it will use to give credit. So if 20% is kept, so 200 rupees, State Bank of India kept it with itself, and 800 rupees it gave as a loan to a person, to an individual. Okay. So what they are saying, same thing, depositor will claim when the person who has, I deposited 1000 rupees. So if in any case of emergency or any requirement of funds, I will go and say that State Bank of India, please give my 1000 rupees, I had deposited it. So State Bank of India is liable to give me 1000 rupees. Clear, Shaila? And the bank borrower possesses 800. So the person to whom I have given 800 rupees, he has to pay me that 800 rupees along with interest, right? So
Yes,
he has to pay me 800 and I have to give him 1000. Okay? Depositor can claim he has 1000 and bank borrower too possesses 800. So how much credit is created in the economy? 1000 plus 800, which is 1800. So thus the total, for some time 1-2 minutes it had gone. Okay, so the total money supply in the economy is 1000. काय होतंय मामा, इकडे या बरं, 1 मिनिट, गेलं आलं परत येते जाते, दोनदा झालं असं. नेटचं बघा फक्त बाकी ठीक आहे. ओके ओके, मधनं ते काय होतं काय माहिती कनेक्शन. ठीक आहे चालेल, बघते मी झालं तर बघ. हो ना, हा त्यामुळे होत असेल. ओके
चालतंय मॅम, अटक म्हणजे आता ब्रेक नाही होते.
काय म्हटली शैला?
ब्रेक नाही होते म्हटलं, आता
ओके
कंटिन्यू.
ओके फाईन. आणि 2 times it got disconnected, so I asked.
मे बी सम इंटरनेट इश्यू.
Okay, fine. So the above example can be extended to cover the banking system as whole. Suppose 800 is deposited to another bank. See, State Bank of India gave loan to another bank, say HDFC Bank. HDFC Bank took that loan. We saw 1000, I deposited 1000 in State Bank of India. State Bank of India kept margin 200 rupees and gave loan of 800 to HDFC Bank. Now again HDFC Bank has this 800 rupees. Okay, 800 rupees. So again it will keep 20% of it. It kept 160 rupees and gave loan of 640 to Kotak Mahindra Bank. Okay, again Kotak Mahindra Bank, what it did, out of 640 it kept 20% with itself, that is 128 rupees, and granted loan of 512. Again it gave to IDBI Bank. Again IDBI Bank kept 20% with it and gave loan. So this process of credit creation will go on following until when? when this amount which is given as loan is equal to the cash reserve kept by the bank. Are you clear on this, Shaila? Amount given as loan is equal to the cash reserve. See, if 200 is the cash reserve and at the end goes on and the bank, another bank gives me 200 rupees as loan. I have that in my deposit. So now the cash reserve is only 200. So the amount that I have as deposit is equal to the cash reserve that I need to keep. So again, can I give the loan, Shaila?
Yes, ma'am.
No, I cannot give now. I have to keep the whole amount as cash reserve because amount which I have is equal to the cash reserve. Got it?
Yes, ma'am.
The whatever the amount I have is equal to the cash reserve that I need to maintain. So I don't have any excess amount. The total amount which I have is equal to the cash reserve or the amount as reserve I have to maintain. So when both are equal, I further cannot give the loan, right?
Yes, ma'am. Yes.
So the credit creation process will stop here. Kunal, clear? Here the credit creation process will stop. That only is explained here. The process will continue and the amount of fresh deposit will go on falling. A time will come when the deposited sum is equal to the cash reserve ratio. At this time, the process will end. The process will then come to an end. Okay? Clear on this credit creation process? Kunal, Shaila? Okay.
Yes, ma'am.
Now we will see what are the limitations in the credit creation process. Okay. It got hanged. What they are saying? Size of the cash reserve ratio. Right, see, if the cash reserve ratio that I have to maintain, that is more in amount, that is more in percentage term, see, then my credit that I need to give will be less, right? Are you clear on this, Shaila? Are you getting? Shaila? Kunal, see, if the cash reserve ratio which is there is more, then the credit which I will be giving will be less, right? If the cash reserve ratio is less, then the credit I can give is more, right? See, out of 1000 rupees, case 1, 1000 rupees I have. Case 1 is cash reserve ratio is less, case 2 is more. See, here it is 20% and here it is 50%. So if it is 20%, 200 I kept with myself, 800 I kept. 50%, 500 I kept, 500 I kept. So when the cash reserve ratio here is less 20% and here is more. So when it is less, I can give more, 800 rupees, and when it is more, I can give less, right? Clear, Shaila, now? So much depends on the cash reserve ratio. When the cash reserve ratio is more, I will be able to give less credit. When the cash reserve ratio is less, I will be able to give more credit. So that will mostly depend on the cash reserve ratio. There is an inverse relation between the cash reserve ratio and the amount of credit that I can give. Cash reserve ratio is a minimum fraction of the total deposit of customers with commercial bank are required to hold as reserves either in cash or as deposits with the central bank. It is set as per the guidelines of the central bank of the country. Amount of loan given. See, if the borrower does not provide any security, do you know what is security or collateral? Do you know, Kunal, what is a security or collateral? See, as a bank, if I need to give you a loan, I will say what? If you don't pay this loan, how will I recover? गिरवी ठेवणं, म्हणजे तुझं घर गिरवी ठेव, सोनं ठेव किंवा जागा ठेव, जमीन ठेव, that is known as collateral or security. गिरवी ठेवणं, you give something like mortgage, right? Security, collateral or a mortgage. That is what we say, right? So that is known as, if you don't provide it, will I give you a loan? No, I will not give, right? Because if you don't pay me the loan amount, from where will I recover it? So it is at risk to me, right? So if borrowers cannot offer security against the loan, bank cannot lend. So it's not the bank, so bank will not be able to create credit in that scenario. So this is out of control of the bank, right? If you cannot provide any security or mortgage, then the bank will not be able to give loan. It will not be able to create credit, right?
Yes, ma'am.
Size of cash deposits. See again, if the bank does not get enough deposits from the general public, will it be able to give more loan? No, right? If the deposits available from the general public itself are low, it will be able to give less loan, because out of that deposits only it is giving loan. It is not giving its own money to the general public as loan, right, Sheila?
Yes, ma'am.
So if the available deposits from the general public are only less, will it be able to give more loan? No. So if the available deposits from the general public are less with the commercial banks, they will be able to give less loan, less credit, right?
Yes, ma'am.
Size of cash deposits. Size of the cash deposit is important in this context. The smaller the cash base, the smaller scope a bank gets for credit creation. Yes, we discussed, if the deposits are only less, the bank will be able to give less loan. It can't give more loan.
Yes.
If people prefer physical assets or prefer to keep cash in hand, bank deposits suffer much, so bank cannot lend. If the people want to keep that cash with itself and not in deposits available with the bank cannot do anything to create credit. Acceptable securities. A bank can lend against acceptable securities. A borrower gets a loan from a bank only against some security, the value of which must be equal to the amount of loan, right? We have to keep some security to get the loan. Controlled by the central bank. Now, the central bank plays an important role in controlling the credit in the economy. There are various measures set up by the central bank or the Reserve Bank of India which are helpful in reducing the credit in the economy or increasing the credit supply in the economy. We will see what are these measures. A central bank possesses certain instruments. By use of this, it can increase or decrease the volume of credit created by banks. Credit controlled by central bank. A central bank possesses a number of instruments for controlling credit money. These are two types of instruments, quantitative and qualitative. We will see what are these. Quantitative techniques seek to regulate total quantity of credit, while qualitative measures affect the availability of credit. We will see first is quantitative techniques. Open market operations. So what is open market operations? Open market operations refers to the purchase and sale of securities in the stock market. We'll see. So when the central bank sells the securities in the stock market, what will happen? People will get money or what? Money supply in the economy, what will happen, Kunal? If the central bank sells the securities in the stock market. I sold the securities in the stock market. So what will happen? People will get money or central bank will get the money? I have some securities in the stock market. I sold them. So when I sold, Central Bank of India, Reserve Bank of India will get the money because it sold the securities, right? How people will get the money? No. As a seller, you take an example as a seller. If I am a Central Bank or Reserve Bank of India, I sold the securities in the stock market. What will happen? People will pay me. So people will pay, I will get the money, right? People will not get. So what will happen to the money supply in the economy? Will be reduced if I sell the securities. But if I purchase them, I have to pay to the people. Right? I purchase securities or stocks from the stock market as a Reserve Bank of India. I will take the securities and pay to the people. When I purchase, I will pay to people, right? As a Reserve Bank. When I pay, the money supply in the economy will what happen? Increase. So these are the measures. So when the Central Bank or Reserve Bank of India wants to increase the money supply in the economy, it will purchase and pay money to the people. When it wants to reduce the money supply in the economy, it will sell. So people will pay to central bank. Clear, Kunal and Sheila? That's the case.
Yes, ma'am.
Open market operations. It implies purchase and sale of securities in the stock market. When the central bank appears in the market as a seller of government securities, people buy such securities by withdrawing money from banks. What they will do? They will remove the money which is available in the savings from bank and give it to central bank or the bank themselves and invest in securities instead of granting loan to public. So what will happen? The deposits from the commercial bank will become less, right? People will remove the money from the bank. So credit creation process will be reduced and they will pay it to the central bank. So in that case, commercial banks and the credit creation process in the economy will be less. In the either case, the power of creating credit will be restricted, right? On the other hand, if the central banks buys securities, money flows out, thus enlarging the cash base of member bank. As a central bank or Reserve Bank of India, if I purchase the securities, I will pay to whom? To the general public or the banks. So they will receive money. So the money supply in the economy is more, so more credit can be created. Clear, Shaila and Kunal?
Yes, ma'am.
Through open market purchase and sale of government bonds, the central bank can decrease and increase the supply of money in the economy. But at the same time, the effective rate of interest on government bonds get changed automatically, which the central bank cannot prevent. Suppose the government bond in question bears a rate of interest of 10% with a face value of ₹1,000. This implies a yearly return of ₹100. If the central bank wants to purchase this government bond in unlimited amount of say 2,000, the effective rate of interest gets changed to 5% automatically, which has no part on the intention of central bank. The bond rates fall. Credit expansion depends upon external business environment and borrower's attitude over which banks have no influence, right? So borrower's attitude and credit expansion and other economic environments, what it is, recession, inflation in the economy and other economic factors also help in determining the credit, not just commercial banks. We saw commercial banks just play a role. Other factors like cash reserve ratio, other things are other things are required, like security should be provided, then only the commercial bank can give credit. Cash reserve ratio, if it Reserve Bank of India increases the cash reserve ratio, less credit will be given. So all these factors are dependent not only on the amount of deposit available with the commercial bank. If the deposit is only less, it can't give more credit. So it is available dependent on all these factors, credit creation. Clear? Clear, Shaila?
Yes, ma'am.
Variation reserve ratio. Commercial banks are legally bound to keep a portion of their deposits in the form of cash reserve, right? Commercial banks cannot give the complete amount of deposit as loan or credit to the general public, so they have to maintain some reserve. So this reserve is known as variation reserve. It is the most liquid asset in their hand, and at the same time it is zero earning asset. So now tell me, if the variation reserve or the cash reserve ratio is more, will the commercial bank be able to give more credit or less credit, Shaila?
What, ma'am?
I didn't hear. We discussed this, so I'm asking you the question. Kunal, if the cash reserve ratio is more, will the commercial bank give more credit or less credit? Huh. Less credit. See, again I am explaining cash reserve ratio or the variation reserve. See Kunal, if the bank has 1,000 rupees available with it, people save money. I am a saver. I saved money and deposited 1,000 rupees. This is deposit with the bank, right? So if the case 1 cash reserve ratio is 10% and cash reserve ratio is 15%. So here it is low, here it is more. So if it is 10%, central bank will keep 100, give 900 as loan or credit. Clear? Right, Kunal? And in the second case, it will keep 500. It will keep 500 and give, just a minute.
500.
It will keep 500 and give
500.
इसका होता है यार, एक मिनट. Marking colors is also same here. It will keep 500 and give 500. It is going from that. Okay. So when it is 50%, is it cash reserve is more? Is the loan more or less than the case 1?
Less, ma'am.
Less, right?
Yes, ma'am.
In the first case, we were able to give 900 loan, right?
Yes, ma'am.
Right, Kunal? In the second case, we are giving only 500. So when the cash reserve is more, the loan we are giving is less.
Less.
And when the cash reserve is less, the loan that we can give is more. So there is an inverse relationship between the variation reserve and the amount of credit that we can, loan that we can give. So inverse relationship. If I have cash reserve ratio is more, I will be able to give less loan. Cash reserve ratio is less, I will be able to give more loan. Okay, this is only explained. Here same thing they are saying. See, naturally, by altering the cash reserve ratio, the central bank can expand and reduce the funds it can lend. There exists an inverse relationship between the size of cash reserve and the amount of credit given by a bank, assuming a given amount of deposit. Now clear, Shaila and Kunal? There is an inverse relationship.
Yes, ma'am.
And we saw it with an example, right? Practically. We saw it
Yes,
with an
ma'am.
example practically how there is an inverse relationship, right?
Yes, ma'am.
In underdeveloped money markets, this technique is more suitable than open market operations or bank rate policy. So when the markets are not much developed, this technique is more useful other than open market operation. What was open market operation? Sale or purchase of securities or stocks in the market, right? In the stock market. That was open market operations, right, Shaila and Kunal?
Yes, ma'am.
The Reserve Bank of India will purchase or it will sell to increase or decrease the money supply in the economy. That was open market operations. Variation reserve is what? How much reserve the commercial bank need to keep out of the deposit they get from the general public, and the remaining they will give as loan. After they keep the reserve, remaining part will be given as loan.
Loan.
Now we will take a quick break. It's 5. These
Yes, ma'am.
concepts will be break घ्यायचा 5 5:30 पर्यंत का? अरे बाबा असं केलं तर पोर्शन संपणार नाही.